And in today's video, I want to teach you something. There was a video I posted on knowing your overall target on a monthly basis, but this is not about knowing your overall target. Although I had to use some of the ideas in trading this market today. So I'm currently talking on a particular pair crash 1000, which is found in Deriv broker. That's your indices synthetics. That's where you can trade them on Deriv. So today I'll be giving you some instructions or some insights to how I did my analysis, starting from the top down analysis to knowing your overall target and also being able to identify a particular entry model for a particular trade setup. Now, I'm going to take you on the step by step process of how I was able to analyze this market so that you can learn from it also. So now I'm an ICT trader and also a day trader. So most times I do take trades from a very high time frame, and I do use monthly time frame in order to know the overall movement that I'm expecting for that month. So we are just in the first week of July, and you can see what's happening here, which is quite obvious that from the look of things we'll be moving out. Like you can see this impulsive move for this month, so from the look of things you're expecting a higher price. So permit me to say that even if my take profit is at the previous high of this month, I am still very correct because I know that this is the target for this month, this buy side liquidity, this buy side liquidity. So even if I adjust my take profit to this high, which is a buy side liquidity, I'm still very correct because this is what happened. Last month came in, or this month itself came into a significant point. This is a fair value gap, although it's not completely mitigated, but it's at most traded into this fair value gap. You can see it traded into it before pushing out. So if it's filling up this liquidity void, the next place we are expected to see liquidity is right above the buy side liquidity. So the overall monthly time frame or the overall monthly bias or direction is bullish, and this is our overall monthly target. So even if price take out this high, it's still very okay, but we just know that this is our overall monthly target, this buy side liquidity. That was how I was able to analyze US 100 for like a particular month, and in less than that 30 days I was able to take three good setups in line with the directional bias and target I had. Same kind of analysis, and just like this one, I'm able to already enter a particular trade using the candle range theory model, which I'm going to explain here. After knowing that this is my target, how do you trade towards the target is very very important also. Now this candle range theory model I saw on a weekly time frame. So let's go to the weekly time frame. Now on the weekly time frame, this is what happened at the beginning of the week, which you can see price was actually around this range trading downwards. So I noticed that if you look around here, we've balanced up all price action, and price have completely balanced everything. So there is nothing you ought to see happen around this region again. Even here you can see how price came down, balanced price action which is weak, taking out liquidity, pushing out. You can see up until this level, because this was the oldest place, the oldest low, like previous big low, and price have not traded below here in a very long time. Now I've explained how the CRT model works, so if you don't really have an insight or if you don't understand how it's been done, you can go to my playlist. I did a full complete video because I'm limited to some 2 years, so I cannot start describing the CRT entry model one after the other. So just go to my playlist and watch the complete video on a different pair. This is a synthetic to show you that this model work on all instrument or indices or currency pairs like that. So the CRT entry model is more like a liquidity sweep entry kind of model. So price took out liquidity from the weekly time frame, the previous week's low. You can see how price swept liquidity from it like previous week. That was like last month's low. You can see 4 weeks make a month. So this is 5 weeks back. Price swept everything below here down to this point. So when I saw this sweeping of liquidity, I went to the daily time frame. It's more like a top-down analysis, like I said. And you can see it also swept the previous day low from this level, which was very, very visible. Now I went back to my 5 minutes, which is the first place I'm gonna have to see a confirmation before taking the market. So at 5 minutes, inside the point of interest, guys. Okay, this is not the point of interest. 15 minutes. Let me just go as far as 15 minutes. So at 15 minutes, look at this is where I met price action because it happened too fast and I was not in the market. So I met price action around here. Let me show you guys. Sometimes it will happen, you'll just be anticipating the price action, and most times it can come to play out without you being online. So it happened here. So I took it as a break of structure because the shift definitely has happened somewhere around here. The shift in market structure happened here. So I saw this break of structure and I had to enter this market, but I didn't know how I was gonna do it. So I went back to the 4 hour time frame. I'm telling you everything I did, and I'll also show you evidence because I shared this trade signal on my group. So I saw this breakaway gap. I saw this breakaway gap. Yeah, it's a fair value gap, but this kind of gap is called a breakaway gap. So now, knowing that this is a breakaway gap, and I don't want to see price come back to a breakaway gap because we're expected to go to another level of liquidity instead of filling up the breakaway gap because price did not completely trade into a good rate. So this momentum in the market was too much. I saw this breakaway gap here. Now I was not expecting price to come into this gap. So this is another mistake. Some people might have been waiting for a retracement into this fair value gap, not knowing that this is a low probability fair value gap. That's another thing you should know, guys. So I knew that this was a low probability fair value gap. So I entered the trade initially from here. I entered the trade. This was my first entry, this first one. So I had to place my stop loss below here so that if there's any retracement coming back into this breakaway gap, I will also wait for a confirmation on the lower time frame. That was why I placed my stop loss directly very steep around this low. That's that. I want to check how many dollar. That's about $3. That's $3. I was looking at 1:10. You can see where my TP is 60. That's 1:20. And we've already done 1:10 on this particular trade. We've done 1:10. So why I shared the setup, let me just take you to the chart where I shared the setup, and even this one, you see this is like a sniper entry, this second one on the 15 minutes here. Let me show you because I shared a second entry on my channel. Not really my channel, it's a group where we do join heads together to analyze and post. Yeah. So you see this is a sniper entry here, but it's not actually for the whole sake of sniper entry stuff I'm saying it, but I'm just telling you. So I got the second entry there, and I'm going to show you how I was able to scout out that second entry. So let me pick out the history. I just want you to know that I first entered around there, then the second entry was there. So this is what I saw on the 1 hour time frame. I saw another fair value gap on the 1 hour. You can see it how I drew this box. So it's not that long. Don't mind this whole frame. So this is the fair value gap on the 1 hour time frame, and you can see I just placed the limit here in the middle of the box, and my stop loss was still at this level also, although it's now at break even. So that is it there. And you can see how price came in and tagged us in. So let me show you the channel. In case you want to be part of this channel, you can do that to send me a link. Sorry, send me a DM on my WhatsApp number, which I'll be dropping here. Then I also have a personal community I'm trying to build for ICT traders. Yeah, this is ICT concept. So if you want to be part of it, you can also join the group on the description of my channel. So please do well to like and subscribe, share this video. This particular trade or this particular strategy or entry model has been trending, like seriously trending this year, and so far so good. I've had too many entry models on them, like too many good setups. They are mostly high probability. Let me just take you to the channel where I share the trade, and I also show you that I do call out trades and give you a kind of review on the trades you're about to take so that you know how to risk on them. So it's a very good thing. Okay, this one is a go setup here. This one see is a go setup. I just shared with them. So I actually showed them my entry. This is a breaker block entry model. If you look at the picture, I still dropped a video on this entry I got. I first hit stop loss because I was trading from the discount level. That was a mistake on my own end. So let me show you something. So I'll show you where I call that a trade. and I'll show you. It was two trades, but I'm talking about crash 100. So crash 1000. So this is what I wrote here. Crash 1000 high probability trade setup, weekly CRT entry model, low risk trade setup, possible second entry at the pending order. Now if you look at this picture, I talked about breakaway gap. So just in case the market want to retrace back to the breakaway gap immediately, I will still get tagged in. That was why I set a limit order in the breakaway gap, just like you're seeing here, but it did not happen. And you can see where my stop loss is still at that level, because anything below there, we are retracing to the breakaway gap, and I need a confirmation. So that was why I had to set the limit order to be safe. I also shared this one, VIX 10 1x counter trading high probability trade setup weekly CRT, same CRT entry model. So do well to watch, because they are actually paying off. If you look at this, is crash 1000, and you can see what it did there. If you look at, this was the profit I made, as at that time I entered the trade. So the CRT entry model is something that is really going, and VIX 10 has already hit TP, so there was no time to do a video on that. That's why I'm actually doing on crash 1000. And if you look at where someone say, if this was somebody in the group, he said, can I still join this? And I gave him the second entry. Yeah, but it's going to be a pending limit order, which I shared it on this group also. So this limit order I shared is what really happened to be the sniper entry, which is actually very, very interesting. See, sniper entry, limit triggered, close way to TP. Now I have to adjust the profit, because I know that it's a weekly trade, but I'm not swinging because the impulsive move I'm seeing in the market is too much. That's why I'm not going to swing the trade. So I'm going to close one of the positions and hold one at half of the trade, because we've gotten to our daily point of liquidity. That's previous day buy side liquidity. Let me show you on crash. So I'm expecting a retracement. So you can see we've gotten to our daily liquidity here. So I will close one, then adjust one, because I don't trust it, because we've gotten so much. This impulsive move is too much. So I'll just close one at 1:10 and leave the other one to continue running. So this trade is potentially 1:20 arrow. So I'll just close one and have my break even to be, my other take profits to be, which is the weekly high. That's, you're trading from one side of liquidity to another side of the liquidity. That's how you focus on the market. So this I know is the monthly target. This high, I know this is the monthly target. Oh, that's not it. Let me check the weekly time frame. Yes, this is the monthly time target. This very high, and I already traded at most 50% of the target in just one day. So that's very, very should I call it, that's very, very fast for me. I don't like a very fast price action. I know everybody want to see a quick delivery in price action, but to me this is too fast in one day. So that's why I'll have to close one, because the retracement has to obviously balance all this. You can see it left a breakaway gap, definitely left a fair value gap. This is a breakaway gap is creating, and I don't know, this liquidity should like be enough for it to, after taking out the liquidity, retrace a little bit before going up to the final destination. But it seems like it likes the liquidity above here. Okay, you see, the spike just came in now. Like I told you, it's very, very abnormal. You see, a spike just came in now. You check on the 5 minutes, a spike just came in now. This is what I want to see, a retracement, guys. So I know what I'm expecting. I might even close out, because throughout today and tomorrow we should be ranging, trying to fill up some imbalances here. So I can even close out the trade now, because I know that we are gone fast, and we've even gone past our target, which was this liquidity. This was the first liquidity. Then when I see a balance in price action, I continue to the overall target somewhere around here. So you cannot tell me to hold on. Like, you don't see a market trade in a particular direction very, very straight up like this. You have to give that zigzag move. So this move is very, very abnormal, and even if it's on my favor, I had to close out, because I know what a normal price action should do. So that's just it, guys. Do have to like, subscribe, share this video, because this is one of the most trending strategy in this year, and you can see it's really, really working out. You can go through my playlist, guys. You've seen me got different types of good trades using, and they are very strictly high probability trade setup, because of the liquidity involved. Like if you take out liquidity from a weekly time frame, just like I did, take out liquidity from a weekly time frame, and in just how many days? In 2 days, you can see the delivery in price action. It was very, very massive. That's why I would prefer the weekly CRT entry model, because once you take out the liquidity from a weekly time frame, the 2 days is going to be outrageous. So you can see in just 2 days, I did 1:10 RR. So if you take out the liquidity from a daily time frame, depending on the daily CRT entry model you're using, at least you're sure of 1:3, 1:4, 1:5. That is it. So the higher the time frame you use in scouting out your entry model, is the higher the risk to reward you get. So that's it. We've gone past our limit, or our, what I call it, our target, which is this previous day high, and I'm good. So it was actually a good trade for me. And I want you to also learn. Please do well to comment, ask questions if you have to ask. Then I'll be answering questions. And if you want me to also teach you like one-on-one mentorship, you can always DM me. I don't really charge high. Just DM me and I'll tell you how much. Even if you want like a coaching mentorship, even if it's the signal service, I'm in. Just come up with your account. I'll tell you my requirement and your criteria to meet. And if you can meet them, even if you want to be my student, I'm going to give you some conditions that you have to meet up to. Then if you can maybe meet up with these conditions, then I'm all in for you. So that's it, guys. Do well to subscribe, share, and also like this video. Yeah, I'm counting on you to subscribe, because I want to get to 250 subscribers by the end of this month. Thank you for watching to the very end. Yeah, God bless you.